Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Tuesday, June 10th, 2014. Markets are trading slightly lower across the board. S&P down 2.5 points, Dow down 15.5, NASDAQ down 4 points. So what's going on in this market? First of all, the volume is minuscule. We're literally less than an hour, 15 minutes away from the close, and look at the volume today, 38.7 million. So, I mean, this is amazing because now it's not a Monday, it's not a Friday, and we're seeing volume that is literally the lightest trading volume. Almost every single day we're seeing a lighter trading day in terms of volume than the previous day. And this is like, you could go back literally 10, 15 years, and you won't find lighter trading days in this market. All right, and again, what a difference it's made from 2008, 2009, where we were doing 500 plus million shares on the SPY. Now we'll be lucky if we get to 50 million today, 10% of that volume. What does that mean? Well, it means ultimately big boys aren't participating. They're not selling, but they're really not buying. All right, it means little investors are picking up a couple shares here and there, and even the little investor, considering 6 months ago you would have seen about 100 million on average, which was crazy light. Then you could make a case, okay, the little investor's piling into the market. Now it doesn't even seem like that's going on. And what does this mean in general? Well, with light volume, generally neutral to upside bias would be seen. That's why I think the markets are near all-time highs. I mean, they're just off of yesterday's all-time high on the SPY. A couple small change in character, significant things that I want to mention that to me could be showing the beginning of the end. And again, who knows really? I mean, this is one of those things where if the volume stays this light, it could really continue to float up into July 4th. I mean, I even said to my members last Sunday night during the No Hype Live broadcast, which is part of the Research Center, that maybe by July 4th we'll be at 2,000 on the S&P, which is only about 50 points away. And again, that even number might be very alluring to big boys like Janet Yellen and the Federal Reserve. But a couple things that should be noted here. Notice how yesterday we sold off late in the day. That's the first time that's happened in literally weeks and weeks and weeks, probably close to a month at this point. And today, interestingly enough, we're really not seeing a big buy program. The volume is light as it is, even though you saw the dip early, which is kind of what we've seen lately, as opposed to yesterday where we rallied early, then sold off. The dip was very much like the previous. I mean, if you look at the charts here, dip early, rally up. All right, dip early, rally up. Dip early, rally up. So that's the way it's generally been until yesterday's change in character. And then today we went back to the previous few days where it was the dip early. But the rally, you wouldn't really call this a big rally up, at least not yet. Now, in the next hour 10 or so into the close, maybe we see the markets get a bid and a buy program hits. It won't take much to lift this market with 38.7 million traded on the SPY, but I'm going to be watching that very, very closely. But bottom line is, in this light volume, the markets are negative on the day, and I do think that warrants a little bit of attention there. All right. What does the light volume mean? Well, again, light volume means lack of participation. And they were even commenting, usually CNBC is months behind on everything, right? But even CNBC today, in the background, I heard them commenting on how light the volume is, and they're starting to say it too. It's like, listen, there's just no participation in the market. When you got the S&P volume or the Dow Jones Industrial Average volume and so forth, this light, it just tells you that there's a lack of players. Now, again, it's important to recognize that there's a lack of buyers, but there's also an equal lack of sellers. And when you have a flat market like today, that's basically what that's telling you. If the market's floating up, then even though you have very minimal amounts of buyers, you have slightly less sellers, right? And that's why the market can go up. So either way, it's not like people are buying, it's not like people are selling, and it's just kind of this market that's treading water, slowly floating higher, and very curious to wonder when the game ends. All right, and this is what should really scare each and every one of you, and I'll talk about this, then we'll get into some other charts. But if you literally have this light volume, and in this light volume environment, the markets aren't going up more, then what happens when something shocks the market? Like, imagine if something happens where China or Vietnam go at it, or something happens in the U.S. I mean, God forbid something bad happens globally, some eruption of some sort. All right? What happens when there's this few buyers in the market, and all of a sudden everyone tries to sell at once? That's a scary scenario because that's where you get a flash crash. That's where you get a crash in the market. And the lighter the volume gets, the more apt to see a crash you are because, again, that means, remember, look at the volume here, 38.8 million now. And again, that's basically equal buyers and sellers. So that means, let's say, we'll call it 20 million. Actually, it's a little less. We'll call it 16, 17, 18 million, 19 million on the buy side, and slightly more on the sell side today, since the markets are essentially down just ever so slightly. So what happens when 200 million shares on the spiders try to get dumped? Who's buying? I mean, maybe the Federal Reserve comes in. We talk about the plunge protection team. Maybe that's where they come in. I just don't know if they'll even have enough money to kind of stay the collapse if that does happen. So again, listen, I'm not saying that's going to happen in the short term, but it is a fear that every investor should pay attention to because the volume is so light. If volume was heavy, and it was the buy side volume and you had volume to absorb, buyers to absorb heavy selling, well, then it wouldn't matter. Then the crash is actually less likely because of that aspect. But when volume is just light, it leaves the market very vulnerable. And this is something that the media should really talk about because it is something that absolutely could happen. And again, who knows if there's ever a catalyst. Ultimately, I hate to say it, but history has shown us that eventually there will be, and that's what I'd be scared about. Now, is it worth picking up a bunch of puts on the market that expire in July or June? No, because we don't know if it's going to happen in the next month, in the next 2 months, in the next 6 months. But the point is that at some point, inevitably, something will happen globally that will trigger a mass exodus. And when that happens, that's what you have to be scared about. That's literally where you get a crash, guys. And mark this video's commentary right now. Mark the date, which is June 10th, 2014 at 2:53 p.m. right now, Eastern Time. That is what you have to be worried about. Okay, so in any case, going into a couple other charts while the markets are slowly floating off there, and you can see really the highs of the day right here. This is really where we've been all day. And if you take the high, interestingly enough, if you take the high of the first candle and just draw it across, you've never been able to close. You pierced it, but you've never been able to close above that line. That's only a minor scenario. That doesn't really matter. I'm just pointing that out. But if we go to some other charts out there, what's moving today? Let's take a look at Amazon. Amazon's actually up another $4.50, but that is off the highs. And Apple here, guys. Apple's an interesting one to me because I actually think that Apple could be getting near a short-term top. Post-split, a lot of the buyers have come in the stock. My guess is you'll start to see some sellers in the next few days taking a little bit of profits off the table on Apple. And that is something on my radar that I am interested in following on the charts. Okay? So that's what we have on Apple. Qualcomm today down 70 cents. I am short Qualcomm in the money on this play. I did put out a new short opportunity out there because it was just so primed for it. So that one, again, if you're a member of the research center, you can be all about. A few days ago, late last week, I put out a short on Boeing. That's working out perfectly so far as well. We do have some longs out there as well, but it's all about selecting the proper chart setup. All right, you never want to be an all-out bear, all-out bull. There are certain charts that will look good on the long side and certain ones that will look good on the short side. And it's up to you to decipher those charts and decide which ones you're going to take. And that's what we do here, and that's what we pass along to our members at InTheMoneyStocks.com. All right, couple other stocks out there. JP Morgan continues to show some strength today, up 26 cents. Not a big day there, but notice how the markets are slightly negative, so obviously that's a slight positive for the stock that is able to go there. And if we go to the daily chart here on JPM, you can see it actually got through this gap fill. And really, I don't have a ton of resistance here on the chart. I'm just trying to see where the next level would be. I would say right in here. See pivot high, pivot high, pivot high, and pivot high. So I would say, I can zoom in a little so you can see, I would say if it could somehow shoot up all the way to that level, that would be a pretty interesting level for me, which again is at the 59 and a quarter area. So 59 and a quarter on JP Morgan. Now, one stock that's interesting to me is Tyson. Tyson has been crushed after their buyout from Hillshire Brands. Essentially, they bid and the market believes they paid for the buyout, and this stock has really collapsed down. Notice the 200 MA is getting very attractive, and then there's a gap fill right here that we should be watching. I would love to see tomorrow a flush through the 200 to gap fill, which would be another dollar and change down, basically a repeat of today if we got it tomorrow, right into this gap fill, and that would be a swing trade buying level. So there's some interesting opportunities here. One other thing I want to mention here, folks, is take a look at IYR. excuse me, IYT. Now, IYT, folks, this is the transports ETF, so this is tracking the transports, and the transports have led the market. I mean, there's no doubt about it. Like the biotech index before the Nasdaq pulled back a month, 2 months ago, was leading the Nasdaq. So the biotech was having a great run, unbelievable run. I can show the IBB chart here, just an absolutely stunning move up. Look at this vertical move. This was leading the Nasdaq up, and this pulled back, and the Nasdaq pulled back. Well, the IYT, the ETF for the transports, this has led the Dow and the S&P. And we're starting to see a potential put a little bit of a top here. There's a little bit of support here, which you bounced off of. But it looks like a nice little doji there, and maybe a little bit of weakness showing up here. And if this starts to come in, if the transports ETF starts to come in, this should actually drag down the S&P as well. So the fact that it's a little weaker today, down 50 cents, was down over $1 earlier, but kind of bounced and recaptured. But that is something that you must pay attention to as well. I think that's going to be one of the key leading indicators to a potential drop. 3M's down about 50 cents today. We got McDonald's down, Disney down, DuPont down, Boeing I mentioned earlier, that's down. So it looks like there's a fair amount of small drops today. Nothing dramatic yet, but definitely seeing some smaller to the downside action. All right. Other than that, I think that's about it, folks. Let's just flush back with about just a little over an hour to go in the trading day, and literally we're under 40 million. So yeah, I'm gonna guess we do 50 to 55 million on the spiders in terms of volume today. Leaves about 10 plus million, 10 to 15 million for the last hour, which is a lot. I mean, that would be one of the biggest hours we've had of the day, but I figure usually that final candle of the day on the 10-minute has, 3 or 4 million in it alone as people jockey for position ahead of the next trading day. So that could be the case. And right now the spider's down 25 cents, minimal day, slight downside. Again, watch. I'm curious about the close. Do we see a buy program at the end of the day which would be bullish for the next few days? If we see a sell program that's bearish, if it's a sideways close, it's more of a neutral to me until we get more volume in the markets. All right, guys, thank you all. Come join us here. Take a 7-day free trial to inthemoneystocks.com. Most of you are all about the research center. That's swing trades, and investors will really generate good returns from the research center. You get swing trade alerts with entry, exit points, and all that stuff. So that's where you're mostly going to want to go. If you're a day trader, there's the intraday stock chat free trial as well. Take care, folks. Have a great afternoon, and I will talk to you tomorrow.